affordability, we were talking about interest rates, we're talking about inflation. The housing market often comes up. You know, certainly houses, homes are one of the biggest assets on our balance sheets. We've seen mortgage rates touch 8% or get pretty close to 8%. How home prices have stayed up relatively high. What are our thoughts on the housing market, Mike? You know, maybe I'll pass the mic over to you to start us off on this subject. There seems to be a lot going on there to unpack.
There is, and I'll start by talking a little bit about mortgage rates, because obviously that is a hugely important factor, and I'm sure everyone is aware. We all see the signs on Interstate 15 about where mortgage rates are at today. And I said last time on this call that we thought over the longer term, there was probably some room for mortgage rates to fall. They certainly haven't done that in the interim between the last call and this one, because as you noted, Liz, they did get up to 8%. They've eased back a little bit just over the last week or two, but we're still firmly in the 7% range. Our view longer term is still the same, which is that there probably is some room for mortgage rates to fall over the 3, 5, 10 years that are to come, based on where we expect inflation to ultimately shake out and the general interest rate environment. But when we say mortgage rates are probably likely to fall, we're talking into maybe the 5 to 6% range, let's say. Certainly not back to the 3% mortgage rates that we all enjoyed in the first couple of years after the pandemic. And so what does that mean for home prices? Well, obviously, high mortgage rates hurt affordability, and that in and of itself, all else equal, will pull home prices lower. But all else isn't equal. One of the other kind of knock-on effects of high mortgage rates is that nobody wants to sell their house, because so many people have low rate mortgages that they don't want to give up by selling their house and moving. And so it's really constraining supply, and the availability of existing homes on the market is really low. That has the effect of pushing prices higher. So even just within mortgage rates, there's kind of two countervailing forces here. Affordability is a challenge, which tends to pull prices down, but availability is also a big challenge that tends to push prices up. So that's kind of the mortgage rate picture. Jason, I know there's other factors that influence home prices. I don't know if you want to touch on a few of those as well.
I think you did a great job covering the bases. Totally agree with your assessment. And I think, inventory is the biggest variable that is going to dictate the direction of the housing market at the national level over the next 1, 3, and 5 years. That's the supply side, as you mentioned. On the demand side, I think the good news is if you're a homeowner, less good news if you're trying to buy a home, i.e. that affordability calculus. On the demand side, we're still seeing a bulge in terms of new household formation from the millennial population. Gen Z behind them is a fairly big cohort. So I think there's enough demand in the years to come to stabilize housing. The question is, what's the cost of financing, as you touched on? And then, of course, what's the available inventory? And there's been a mismatch of demand and inventory, and that's why we've seen, in part, these higher prices over the last many years, quite frankly, since the housing bottom in 2012. So it'll be interesting to see.